Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 360 on January 31st, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SoundHound AI, Iris Energy, and Bank of America, and we discuss three new trades on Supermicro Computer Inc., JD.com Inc., and Pfizer. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. The two main equity indexes finished the week in different directions. The Dow Jones Industrial Average grew 120 points, closing at 44,544 points on Friday. The S&P 500 index lost 60 points, ending the week at 6,040 points. And now it's time for the topic of the week. The topic of the week is shortcuts and cheat codes. I've been an uncle since I was 11 years old. That means that my older nieces and nephews at times look up to me like an older brother rather than an uncle. They watched me graduate from high school, graduate from college, move to the big city and start my trading career. They saw me get my MBA from a top school and navigate the challenges of working at an investment bank during the financial crisis. In short, they saw me put in the work. However, just because they saw me put in the work does not mean they wanted to put in the work themselves. They always seem to be looking for a shortcut, a faster way to get the prize. Unfortunately, life doesn't offer a whole lot of shortcuts. Typically, the prize goes to the one who put in the work. I believe it was the Stoic philosopher Seneca who said, "Luck is where preparation meets opportunity." The people looking for shortcuts typically are trying to avoid the preparation part of that statement, but are still hoping to get lucky. I'm not saying it won't happen, but it certainly is less likely to happen without the preparation. If you've played video games, you have probably heard of something called a cheat code. Cheat codes help you overcome an obstacle faster or even skip a level along the way. Even though I'm not big on shortcuts, there are some cheat codes in life. I learned to trade options from other people who had already been trading options for a decade. Mentorship is definitely a cheat code. It's not a shortcut because you're not really jumping the path. I still had to follow the path. The cheat code just gives you some extra tools to face the challenges that are on the path. Sometimes the cheat code might even help you completely avoid an obstacle on the path. A cheat code that made a difference for me, and the one that I advise to anyone who wants to learn options, is to find a good mentor or coach. I can't imagine trying to learn to trade options simply by reading a book and not having a mentor or coach that I can ask questions from and get wisdom from real life experiences. If any of you are seeking a cheat code to learning to trade options faster and deeper, send me an email and we can see if one of the coaching programs I offer fits you. To wrap this up, don't spend your life looking for shortcuts. Instead, focus on learning the cheat codes by having a coach or mentor who is further along the path than you are. So that's it for the topic of the week. Let's dive into the trading review from this last week. This last week was obviously a wild one with the DeepSeek AI effect on the U.S. market. You also had a Federal Reserve interest rate announcement. So at the end of the day, there seemed to be a lot of news to get us not that much back to normal. We moved far down and came right on back up. Now, most of the trades on today's show were negatively affected, but hey, that makes for a better show. We'll give you something to talk about. So here's the trading review. We're going to start off with SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in uniform, N as in November. At the time, the stock was trading for $15.84 per share. I looked at buying stock and selling the February 16 call at $1.90, hoping for a return of 13.01% in 4 weeks. Well, shares of SoundHound AI fell $1.69, ending the week at $14.15 per share. The option that we sold lost $1.03, leaving us with a net loss of 66 cents if we were to close the trade out immediately. Now, the share price is still above the break-even price, which means we are still within range of making a profit, albeit a smaller one. Remember that with the covered call, if the stock remains in your account after option expiration, assuming it wasn't assigned away, you can sell another call option on that stock in the next month. That alone could make this trade very profitable over time. So right now, because our share price is still above the break-even price, I'm not looking to make an adjustment. However, it's good to have a plan in place for if the stock continues to head lower. Next up, we have the credit spread on Iris Energy, symbol I as in India, R as in Romeo, E as in Echo, N as in November. At the time, the stock was trading for $13.32 per share. I looked at selling the February 13 12-half put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of Iris Energy fell $3.10 per share, closing at $10.22 per share on Friday. The out-of-the-money put spread that we sold is now fully in the money. That means we are taking a loss on this trade for the week so far. And as far as adjustments go, I considered turning the short put spread into a long spread. However, the math just doesn't work out at all. You can certainly sell a higher strike call spread, but the math really doesn't work out on that either. So the best course of action for now will be to either track the stock and see if it bounces higher, or to simply close the trade out and take the immediate loss. The best thing about trading a spread is that we have a maximum loss possible, right? We know our maximum loss right from the start of putting this trade on, so we don't have to worry about losing a ton of money. Even though the stock went down $3.10, we're going to lose roughly 10% of that if this spread expires in the money. For now, if you were to close the trade out early, you would just about value that spread at full value, but there's still 3 weeks left. Just like the stock fell $3 in a week, it could also rise again in 3 weeks. So I'm not a fan of closing this trade out early. Of course, you can make an alteration, but as I said, the adjustments or alterations really aren't working out from a math standpoint. So I'm going to let the math dictate that I just wait. We are way below the break-even point, so if you wanted to exit the trade, you can. It's just that you might trade or have to pay full value on the total spread in order to exit. I don't believe in doing that. If I can get out for less than that 33 cents, our maximum possible loss, then that might work. But otherwise, if I'm going to take a full loss, I'd rather let time work for me right now and see if this stock is going to head higher, because it could head higher and we might end up making money on this spread after all. So I'm going to wait. Just want to give you my explanation as to why. And then our final trade last week was a debit spread on Bank of America, symbol B as in Bravo, A as in Alpha, C as in Charlie. At the time, the stock was trading for $46.51 per share. I looked at buying the February 46.5 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 4 weeks. Now, shares of Bank of America fell 23 cents, ending the week at $46.28 per share. The in-the-money call spread that we bought is now at the money. The stock pulled back to 4 cents below our break-even point. Now, with 3 weeks left until expiration, I can wait a few more days, maybe even a week, before I need to make an adjustment on this trade. I'll look for the uptrend to continue this week, and if not, I'll look to adjust this trade by making it a credit spread. Have a plan, but wait until you're certain the trade will not bounce back in your favor, because if you make the adjustment, you might actually guarantee a loss on the overall trade, even though you're limiting the size of that loss. I want the probabilities to work out in my favor, so I'm just going to wait a little bit and see what this stock is going to do. So that's it for last week's trade review. Not the best results, but hopefully the explanations make sense to you guys. If they don't, feel free to reach out by email. So we're going to go ahead and get into the new trades for this upcoming week. Of course, all new trades on this week's show will use the February 21st expiration for monthly options in February. Let's start off with the covered call. I'm looking at Super Micro Computer Inc. Symbol S as in Sierra, M as in Mike, C as in Charlie, I as in India. The stock ended the week at $28.52 per share. I'm looking at buying that stock and selling the February 29 call at $3.50, hoping for a return of 13.96%, almost 14% in 3 weeks. Now you enter this trade by buying stock for $28.52 per share and selling the February 29 call at $3.50. This trade makes the most money if stock prices finish above $29 per share. The break-even price is $25.02, and in real terms, the stock purchase will require $2,852, and you'll collect $350 for selling the option. Next up, we have a credit spread on JD.com, symbol J as in Juliet, D as in Delta. The stock ended the week at $40.72 per share. I'm looking at selling the February 40 put spread at 18 cents. That could give me a maximum possible loss of 32 cents per spread. Now you enter this trade by selling the February 40.5 put at $1.57 and concurrently buying the February 40 put for $1.39. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $40.50 per share. The break-even price is $40.32 per share, and in real terms, you'll receive $18 per spread that you sell and have $32 at risk. And then our final trade on the week is going to be a debit spread. I'm looking at Pfizer Inc., symbol P as in Papa, F as in Foxtrot, E as in Echo. The stock ended the week at $26.51 per share. I'm looking at buying the February 26 half call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Now you enter this trade by buying the February 26 call for $1.04 and concurrently selling the February 26 half call at 72 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $26.50 per share. The break-even price on this trade is $26.32 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys for listening. Thank you for those of you who stay up late on Friday night and manage to listen to this almost live, or those of you who decide to listen to it on YouTube. We do have some people that listen to the show via YouTube just because the transcript is there and it makes it easier for them to write down the trades as well so they can track them on the weekend. But whatever is best, I'm happy that you guys listen or watch and follow along. If you have any questions, definitely feel free to email me. Otherwise, have a phenomenal weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.